Hello, everyone. This is Dr. Duru from Ahan Analytics with the Market Breath. I could have chosen 100 different titles for this week's segment. I went with small caps and Market Breath because Market Breath both had a bullish moment with a big breakout and a bearish moment with fading right at resistance from the overbought threshold. So it was both great and disappointing. So we'll get into that in a few minutes with the charts. Now, this week had so much going on. This year has started off fast paced. In fact, I think the pace is accelerating. The headlines are swirling. All sorts of things are going on, and it's going to continue into next week and for several weeks and maybe months to come. So we're just going to have to get used to staying on our toes. I'm talking about those of us who are watching the markets. There's a lot of headline risk. You have to stay on top of it in terms of positioning, what you're trading, and what you decide to hold overnight. So we started off the week dealing with the fallout from the U.S.'s invasion and attack on Venezuela and extracting the president, and then all the rhetoric that followed after that about the U.S.'s hemispheric domination. We had the CES, the Consumer Electronics show in Las Vegas, where semiconductor stocks got a lot of focus. We had the jobs report on Friday that was kind of mixed. I don't think it really had much of an impact on the market. Home builders, big time focus. And those of you who have followed me, and please do follow or subscribe, huge banner week for home builders, big time headlines. And I'll get into that when I talk about the charts coming up. Earnings week comes as earnings start in full force with the financials and airlines next week. In the coming week, we've got December CPI. So the government's data is starting to come in. CPI is the consumer price index. So this is going to give us a read on inflation. We have a lot of Federal Reserve folks speaking next week. So there's big time headline risk from those people. And then finally, we were supposed to get a ruling from the Supreme Court today on the tariffs, but they delayed it. Don't know why. They postponed it till next week. The headline I saw suggested that the ruling may come Wednesday. So I don't need to tell you, given what we went through last year with tariff headlines, that the Supreme Court's decision could be huge, whether to the upside or the downside. And in fact, I'm not even going to guess how the market will react to either kind of news. I really think it's 50-50 in terms of what the Supreme Court decides and how the market responds to either yes or no or positive or negative. All right, so I hope I'm helping you to appreciate just the swirl of potential catalysts that are now out there. Lots of headline risk, lots of macroeconomic risk. I didn't even talk about all the stuff that's going on geopolitically, to say the least. And yet somehow the stock market ended the week, this first full trading week of the year, at all-time highs. And when I say stock market, I mean the small caps and S&P 500. All right, let's take a look at what happened, starting with Market Breadth. All right, so here is Market Breadth, my favorite technical indicator, the percentage of stocks trading above their 50-day moving averages, what I like to call AT50. And this is what I mean by both the bullish and the bearish developments this week. So you can see right here, we started the week breaking out of this primary downtrend that's been bothering me for months, represented by that purple line. And I'm very happy that that happened, of course, since it's been bothering me so long. And, there was a pullback on Wednesday, but essentially Market Breadth went straight up. And look at this. It got as high as 69%, essentially fading directly from the overbought threshold at 70% and closed at 66%. So we went from a bearish implications of failing to break out of this primary downtrend to now a bearish implication, which is even stronger actually, of fading from the overbought threshold. So according to my AT50 trading rules, which you can find in my blog at drduru.com/122, this is a bearish development. And it's ironic because the market's looking pretty bullish, as I will show you. Actually, let's first take a look at the percentage of stocks trading above their 200-day moving averages, or AT200. And you can see here a very clean breakout Yes, it faded as well as AT50. It closed at 63%. Now, I don't have overbought or oversold thresholds on AT200, but you can see here very bullish development to get to what is now what is this, 13-month high. So very good. And so it is at its high levels, what represents high levels, sorry, for the last several years. So that's pretty good there. But overall, like I said, market breadth development is bearish. All right, let's take a look at the S&P 500. S&P 500 struggled a little bit during the week, right under this the all-time high set in December, and broke out today with a 0.7% gain to a new all-time high. So that is bullish, and you can see there's room to go. And I bought some call options expiring next Friday on the breakout to the first intraday on this first all-time high there. So I'm looking for a gain maybe up to 7,000 at some point in the week before any kind of slowdown or pullback. Let's look at the NASDAQ. The NASDAQ was also looking pretty sluggish. It stopped essentially right at the last peaks and still has a little ways to go for the all-time high. So presumably, if the market is going to continue some momentum, it has some room to go here to at least challenge the all-time high. The biggest news and the biggest great thing for me was IWM, the ETF of small caps, the iShares Russell 2000 ETF. You can see here, it was the primary driver of the breakout of market breadth. Support perfectly here at the 50-day moving average as the red line, and then straight up. I took profits right on Monday on the call options. You know, as many of you know who watch this channel or read my blog, I have a large core position in IWM, and I like to trade around it with call options. I bought my last tranche here the previous week, right at that test of 50-day moving average support. This is why I love technicals so much. And like magic, IWM bounced and I sold because I had a decent profit on the call options. I didn't want to risk, IWM dribbling back down and following the earlier downtrend. And instead it soared for the rest of the week. So that, I'm not going to complain about this at all. Actually, sorry, I got this mixed up. This was Thursday. The bounce is on Friday. That's when I took the call options. I had the unusual case of coming into this last week without any IWM call options. Sorry, I got that wrong before. So I watched this whole week without having any call options in play to sell. But that's okay. I have a large amount of shares, and I'm never going to complain about IWM rallying. All right, let's dive right into the stocks. So as I said, Venezuela, the big headline, all the rhetoric that's come out. And interestingly, oil did not really respond on net until today, Friday. So check this out. So we opened the week with USO, this is the United States Oil Fund, jumping only 1.8% on the attack on Venezuela, and then plunging the next day 2.4%, and then Thursday another surge by 4.1% that took it off the lows of the week. A lot of churn. Today was a breakout day, but then look at this strong fade from the 200-day moving average. So I am not going to play this. Too much geopolitical headlines. Oil is such a manipulated market anyway. I am not going to try to play around the headlines on this one, but I just wanted to show the uncertain outcome of the geopolitical headlines around Venezuela. Next up, like I said, CES on the Consumer Electronics Show in Las Vegas. Semiconductors were in big focus. And this is ticker symbol SMH, the VanEck Semiconductor ETF. It started the week with a nice breakout, 1.1% to a new all-time high. It churned a lot from there and then broke out to a new all-time high on Friday of a 2.7% gain. Let me just pull back. You can see semiconductors has really been in focus throughout this whole AI run-up. So this has been the core epicenter play for the AI run-up. And let me just show some components in here. Look at this. And Micron, I mean, just soaring this just out the gate this year. let's do a quick estimate of what this is. It closed last year at 284, let's say 285, and right now it's sitting at 345. So it's gained 60 points. What is that? About over 25% gain already just in the week and a half of trading this year. That's absolutely astounding. Of course, Micron has really benefited. I mean, it's not a parabolic move, but it is definitely a straight up move. That's ticker symbol MU. I don't have any positions in MU. I took my last profits, I think it was back in December, actually. It was actually a nice gain that I got playing this 50-day moving average test. And unfortunately, I did not make a fast move to play off of this 50-day moving average test. Again, look, very perfect technicals here, right? That's been support. And now Micron on a technical basis overstretched because it's been falling along the upper Bollinger Band, this black line that defines price volatility. As I mentioned earlier, the year also got off to a fast start with my shopping list for the year. Just about everything I put on my shopping list has been active to start this year. Intel is a huge win. I sold my call options. I think it was on Wednesday, took a nice profit there. I paired that with the shares that I bought. I think this was on Monday that I bought in. And actually, it may have been Monday. Sorry, I don't quite remember. Oh, I bought it on the breakout. Sorry, I bought it on the 50-day moving average breakout. And I'm just going to hold the shares as long as I can. So I have a core position in Intel. So today's 11% gain on news that the president talked to the CEO. We don't know about what, but the market just liked it and it rallied 11%. In fact, Intel, check this out. Intel now is right back to where it was in March of 2024. So it is on a pretty steep and impressive recovery mission. I am not going to think it can get much higher than 50, but we will see. I mean, much higher than 50 in the short term. Then we have SanDisk. Sorry, let me go back to memory. This is actually storage. And SanDisk, similar profile to Micron, just skyrocketed. This year has been particularly strong. Let's see, it closed at 230. Let's call it 238 at the end of last year. And now let's check this out. I mean, it's at 380. That's an incredible move just to start the year, first week and a half. And as you can see from the summer all the way to the fall, actually just a few months, SanDisk soared as well. So this is just like a continuation move. We have Applied Materials, even the semiconductor equipment makers have been benefiting. AMAT, I think, ticker symbol AMAT has been one of the biggest beneficiaries. You can see very nice breakout. It's held that 20-day moving average trend line. That's the dashed line there. So very impressive for Applied Materials. Now, let's get on to home builders. Like I said, they were big time week. This is why I play the seasonal trade on home builders. Again, I'll put a link down in the description so you can take a look at what that trade is all about. This is the iShares US Home Construction ETF, ticker symbol ITB. Lots of milestones here, lots of tags here, but let's just focus on these last 2 days of trading. What happened basically is actually there was a big down move. So let me go back a little bit. On Wednesday, and I forgot to put a label for this. On Wednesday, the home builders sank on news that the president was threatening institutional buyers to ban them from buying single family homes. Now, they're a very small percentage of the market, and taking away their demand is actually going to hurt home builders because they need every little bit of incremental sales that they can get. The home market, the market is very slow, even with the incentives that home builders have given. But then all day long, the next day on Thursday, home builders were just soaring. No news. There's lots of guessing, but no real direct news. ITB jumped 4.2%. And then right after the market closed, we got the news. The president wants to use Fannie Mae and Freddie Mac to buy $200 billion in mortgage-backed bonds. That will likely, actually, I think it already has worked to drive mortgage rates down a little bit and thus make it easier to buy homes. Now, typically, of course, what happens when mortgage rates go down, demand goes up for homes, and then prices of homes go up similarly. But at least with lower mortgage rates, people can have lower monthly payments, hopefully even with the increase, the consequent increase in house prices. So now I have ITB popping on Friday, today at 6.3%, well above the bear market line. That's this purple line here, which is 20% below the all-time high. All-time high was set way back in 2024. So, home builders have been struggling for quite some time. So this is encouraging. I'm going to have to write separately about this. I'll probably put it in Seeking Alpha. I trimmed some of my seasonal trade positions because I had built up a lot. I mean, the market gave me a long time, you can see here, to accumulate lots of home builder positions. And so I took advantage of this pop today to both trim some positions, and I sold call options against another position. And again, like I said, I'll do a more complete write-up, but I just wanted to show that this has also been an epicenter of activity, and I think there's going to be a lot of headline-driven moves to come because the president also said he's going to present a comprehensive housing market plan at Davos, and Davos is later this month. All right. So, let me show you one of the home builders, DR Horton, which I still hold a call spread on. The reason I'm showing this one is because Berkshire took on a big position that was a big deal way back in August. And the market faded that very quickly before DHI ran up again into its final high in September. So I really like DHI now as sort of the tip of the spear of my home builder trades. And you can see even with this 2-day surge, Thursday 4.7%, and today a whopping 7.8%, it's still not even back to where it was when the news broke that Berkshire had bought a large position in the shares. So I think there's still plenty of upside in the home builders, but I'm not going to chase, the surges. I've just trimmed position, and then I'm going to hold to see what happens next, and hopefully we get some pullbacks that are viable. Now, I talked about earnings. This will be financials. It will be the big story next week. I've been forgetting to show that financials have been more bullish than the S&P 500. They broke out of the all-time high back in December 11th. They've been choppy, but overall they've been doing well. And check this out. To start this week, financials soared 2.2% to another all-time high. Churn from there, but still, this is one to keep an eye on because it's hard to be bearish when financials are acting bullish. So this definitely keep an eye on this, and keep an eye on how the market responds to earnings. One of the financials, Goldman Sachs, ticker symbol GS. Sorry, I forgot to mention. Let's go back to XLF. So ticker symbol XLF. This is the State Street Financial Select Sector Spider ETF. Now, Goldman Sachs, ticker symbol GS, is part of the financials. You can see the pattern here. In fact, if I pull back, you can see Goldman Sachs has been on a tear, except for the tariff trauma, drama, and noise. It has been on a tear since its bottom and consolidation in 2023. This to me is a big miss because I check in on Goldman Sachs periodically. I could have and should have bought anywhere along this line, and I just didn't. Instead, I was getting too cute with some trades on XLF. Now, I also talked about CPI next week, inflation. The precious metals are still telling us that there is a lot of distrust in the financial markets about the health of the dollar, about inflation, about the high debt loads in governments. And this is amazing to me. The CME increased margin requirements at the end of last year, caused some big time churn in silver. There was another pullback this week, and the buyers just keep stepping right in with force. Look at this huge volume surge on ticker symbol SLV. This is the iShares Silver Trust. iShares Silver Trust, huge volume surge. So I think this move is actually going to be sustained. I really want to buy the dips on this. The last dip on Thursday wasn't really all that viable to me. I want to at least get it here at the 20-day moving average uptrend. And of course, it would be a total gift if it ever fell as far back as the 50-day moving average, which is the red line. Now, gold, ticker symbol GLD, this is the Spider Gold shares, has provided some viable pullbacks. And the last one was here on the 20-day moving average. And I went ahead and took profits on the call spread that I had. I bought I believe it was a 400, 410, or maybe it was a 410, 420. A 405, 415, something like that. Call spread. I went and took profits on that. I still have a lingering call at the 450 level. That was part of a calendar call spread. I don't think that's going to be profitable, but I'm holding out for another huge surge in the coming week. I also talked about the jobs market. Now, XRT is the state ticker symbol XRT is the State Street Spider S&P Retail ETF. Don't think of the direct correlation between the jobs numbers and how XRT performed, but I think it's very curious that this week was a strong week for XRT consumer spending, and XRT hit a 4-year high. Again, hard to be too bearish on the market when ETF like XRT is doing this well. So this is a good breakout. Now, underneath, there's been a lot of mixed things going on with what I call the consumer-facing stocks. So, for instance, Best Buy, ticker symbol BBY, has not followed XRT at all. In fact, it is technically still bearish below its 200-day moving average. A huge amount of churn this week, just big moves. I mean, look at this. This is a 3% up day, followed by a 4.6% down day, then a 4.3 up day, and then today failing at the 200-day moving average resistance. I think part of this also is traders trying to game the outcome of the Supreme Court's decision on tariffs, because retailers like Best Buy will be highly impacted by tariffs. So in other words, what I'm saying is until the Supreme Court comes out with that decision, best not to trade or overtrade or to trade too much in this area. Let the dust settle after the Supreme Court's decision. It's hard to game that. Don't try to predict it, or at least I'm not trying to predict what they're going to do. And I don't want to have to predict what how the market will respond to what the Supreme Court does. Target, big winner. This is one of the oversold, beaten up retail plays that I like. I haven't written too much about it lately, but you can see here since earnings in November, it's been really strong. It's now back to its previous highs from the summer. I think it's probably going to stall out here. We'll see. I have a covered call position on this one. Actually, I sold it too low. I think I sold a call at the 105 level, actually maybe even the 100 level, but I don't mind if the shares get called away. I'm fine taking the profits. And then finally, on the dining side, very quietly, Chipotle Mexican Grill, ticker symbol CMG, has been rallying. It had a huge 18.2% post-earnings drop to a 2.5-year low, continued to dribble lower late last year, and look, it has been slowly churning its way back up, and it's actually even reversed all of its loss from that last earnings. This is very bullish, even though it's still under the 200-day moving average resistance and downtrend. That's the blue line. It's still overall bearish, but this recovery is bullish. So, short term bullish, longer term still bearish. I went ahead and actually bought more shares after this fallout. So I'm actually happy with this partial recovery. I think I'm still overall red in the position, but like I've said before, I probably spent too much time talking about CMG, but you can see all these milestones that have happened. I just think in several years, I'm just going to be happy that I stuck with this story. There have been times in past years when I ignored CMG and thought that the negative headlines were going to make it long-term unviable. I don't want to make that mistake again this time around. All right, I've talked about First Solar. Now we're going to get into some individual names and individual narratives. I finally had to get out of First Solar, ticker symbol FSLR. I took my profits after Jefferies downgraded it to a hold, claim that there's limited visibility this year. I did buy it as a long-term position, but now the technicals are telling me that the play is over. This is a definite topping type pattern, 50-day moving average breakdown, and there was follow-through selling on Friday. I'll be happy to start getting back in if it tests the 200-day moving average as support. That would be pretty extreme, but I wouldn't be surprised just because I don't think of this political environment as being particularly friendly to solar. So I've been happy that it rallied anyway, but now there's the time to just lock it up, get out and lock in the profits. CDW Corporation, ticker symbol CDW. This one has been very bearish for quite some time. And I've talked about this. I never did get short, and I don't want to chase the short now, but this is something to keep an eye on. It must be company specific. They're an IT company, IT hardware company, and it's been doing pretty poorly. And its earnings have been used to suggest that the pipeline for computer networking, computer goods is not good, is bad, or in IT is bad, but it's starting to look like CDW just has its own idiosyncratic thing going on with this continued downtrend that is diverging from the general bullishness in tech. All right, ACN, I finally got back into, sorry, ticker symbol ACN, Accenture. I finally got back into this one. Their business, what I really like about this business is the consulting has pivoted strongly to AI, generative AI consulting, even so some of it is in government. Bullish 200-day moving average breakout. So I bought some shares. I'll accumulate right back down to the 50-day moving average if the market gives me that price. HTEC, ticker symbol HTEC, is something I talked about last year. It's the ROBO Global Healthcare Technology and Innovation ETF. This is a long-term holding. What I made the point of is that this has made a long-term bottoming process. I accumulated shares along the way, so I'm really happy about this recovery. This is the future. Healthcare tech is the future. I'm glad I stuck by this, and I'm going to continue to stick by this one. So this is one of my favorite ETFs going forward right now. I talked about Datadog, ticker symbol DDOG, being very bearish, weighing on me. I had thought that with this big post-earnings gain that meant something, so I bought some shares at the 50-day moving average. I held on to see what would happen on this test of the 200-day moving average. I almost actually bought more shares when it bounced off of the 200-day moving average, almost in picture-perfect form, but I missed the market didn't give me the limit. And I'm glad that it didn't, because the next day it fell 7.6%. That was a warning sign, and I had to get out. I waited for follow through. And sure enough, right at the open, there was follow through selling. So I just got out at a loss. There just sometimes you have to take the loss because I don't know what's going on. The market clearly sees something that it's worried about. It could be nothing, but I'm content to just wait until the next earnings and see what happens after that. So I'm out of Datadog now, ticker symbol DDOG, part of my risk management. So not all stories this week were good. Here is Illumina Incorporated, ticker symbol ILMN. I'm just showing this one because it also made a bearish to bullish reversal that I bought into, and I'm glad that I did. This week was a really big week. Biotech is also a big area, I think, from the second half of last year that's just going to carry on into 2026. And the great thing about biotech is it's also more independent of all of the geopolitical risk that's going on and the headline risk that's going on. Even the headline risk that we have in healthcare with all of the rising costs don't directly impact biotech in the short term. So if there is selling that happens because of that, to me, those are viable dips, particularly for individual biotechs. In fact, let me just show you one biotech because, again, I just want to show how I can also miss things. Zentalis Pharmaceuticals, ticker symbol ZNTL. This is something that I played before. A friend of mine who's really expert in biotech helps me out identifying some of these plays. We like to buy when the market overreacts. So we made some money trading the volatility way back in 2024. And then again, I think it was early 2025, but then we finally got out. My friend tells me that our last time we got out was at $4. And I had a price alert on it, so I've been keeping up with it. And this is when, again, the technicals are magic, but I missed this. Look how perfectly Zentalis failed at 200-day moving average resistance, and then the 50-day moving average resistance. And then it broke out big time with a 30% gain on Tuesday on good news outcomes on one of its drugs. I didn't move fast enough. I thought the move was too big. It didn't really sink into me just how good this news was. And the stock has just soared double digits every day since then. It is now back to almost back to where we last sold this stock. It's at 374, almost a triple this week that I missed. Completely missed the whole thing. Just for some grace for myself, there were a lot of things going on this past week, as I mentioned at the front, lots of headlines, and I was managing some other positions that went well. So, if I miss one or two things, that's just going to happen. I'm only human, only so many things I can keep tabs on. Finally, let's end on nuclear, Vistra Corp, ticker symbol VST. I had been watching this one because it curiously has been trading very poorly since October. You can see this downtrend defined by the 20-day moving average, bearish breakdown below the 200-day moving average, and then out of nowhere, it fell, what was this? 8.8%. And I thought, uh-oh, Vistra is in definite bearish trouble. This seemed to confirm it. And more selling the next day. And then suddenly there's a big deal with Meta platforms for their power. Now, curiously, even though it did gain 10.5%, it failed. I'll just zoom in here. It failed again at the 200-day moving average resistance line, and is now below its 50-day moving average line. So technically, this downtrend is still in effect, even with the good news tailwind. So I'm going to just keep an eye on this one. A breakout is buyable to me. So if it breaks out above there, that's buyable. I don't want to short a name like this because, as you can see, at any moment, on good news and that kind of thing. All right, so that is it for today. Remember, this is info for your use, for your educational use. Trade according to your own risk management and time profiles. Also, please share and like this content so the algorithm knows what's up. If you have questions or comments, put them down below. Subscribe to this channel, and I will see you the next time. Thanks for checking in. Bye-bye.